The traders. My name is George NYABADZA. I thought I would do something a little bit different, in this session, Trader Talk Radio, and welcome. And the reason I'm saying that is I'm busy in my trading journal, looking at the results that I've been producing, going back to my charts, checking out my strategies, just to understand. I use the review of the month result, my trading journal, so to speak, to understand how I, as the trader, have been trading against the strategies that I've got in place. Now, all of that we can just put under the heading trader psychology, which is what I want to talk about today, but something which you may not have considered. But as we go through it, I'm sure it will make sense. It's how our brain processes information and how that leads to the way that we trade. So I've just called it the brain's neural structures versus change in marketing conditions. Now, just to simplify it, if you consider yourself in the way you respond to the environment around you, the world around you, whether you're trading, whether you're with friends, whether you're at work or just walking around, what makes it easier for us to use the 100 billion neurons that we have, and that we have in our central nervous system. That's the cranial brain, the brain in the head, and of course our spinal cord. What makes it easier for us to use that complex mass of neurons, where each neuron has within it 100 billion atoms, is the simple fact that our brains create pathways out of ways that we have responded to previous events. In other words, we become conditioned, over time or instantly and automatically. And if you have the simplest study of that, if you ever look on the internet for some of the information that's there, you will get to understand that our brains create ways to respond to situations, neural structures. Over time, when events are repeated over and over, we learn to respond in a certain way. Or if you are in a traumatic event, something that is of deep emotional impact occurs immediately, the brain, in order to process that, can create new neural pathways which affect the way that you respond in the future. Now, George's question is, what has that to do with trading? Well, let's think of this. I've just pulled up a chart here, a chart that I don't trade at all. I've hidden the name, the time frame, the price, and the time scale. For those who trade this particular market, you'll be able to say, hang on a second, I know this chart, and be able to pick it up quite easily. But just to avoid us being distracted, it's a market that I don't trade, and I've hidden everything around it. Now, if you ever look at it as a trader, what comes to mind? If you had to give us the highest level summary of what is taking place in front of you, I bet if we ever debate and discuss and throw things around, all of us in the end come to agree that, hang on a second, from left to right, the market went up. This was the price down here, and at the end, this is a price. So if you just do a straight line, the market went up. But as the market went up, things took place within it. Market went up, went down, sideways, went up, down. But overall, the market went up. Now, as you look at this, each one of us already, even on just drawing this line, you might have thought, oh, I hadn't thought of that. But that's perfectly fine. Whatever way you responded to it is correct, because that's what you are seeing. That's what your brain immediately processes. But once you provided new information, a new way to look at it, say, oh, hang on a second, that's actually quite correct. I can understand that. And you are starting to activate different thinking processes in your mind. Now, if I highlight a few other things on the chart and say, well, just ignore the areas that are marked in yellow for now. And what can you tell me about what remains on the chart? So every area that I've marked yellow, whether it's a few candles or not, just ignore that. Now, I know some of you are probably saying, well, what's this time frame? What are we looking at? Well, consider it whatever you want. It could be a daily time frame, could be a monthly time frame. Use higher time frames for it could be even a lower time frame. Doesn't matter. Time frame doesn't matter, but it's still the same price action that we are seeing. If you remove those areas marked in yellow, what would you be saying? How would your brain be processing it? Well, I bet you to a great extent, once you look at this here, okay, excluding the areas that are in yellow, I could say everywhere we have those white candles, market is going up. So right here, market is going up here, George, we should be buying. It's going up here, we should be buying. It's going up here, we should be buying. Going up, 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 we should be buying. So you could say that, and I say, okay, everyone, do we agree? Your thoughts, and give us your thoughts, your views, etc. But generally, what is happening is that in those areas, the market is going up, and we should be buying. Why would we all be agreeing to that? Well, it's because all of our brains have been trained by looking at chart after chart, day after day, week after week, year after year, to say when these kind of things are taking place, we should be looking to buy. Well, if we carry on with that view of things, or that assessment of the charts, and if I then say, okay, now let's look at all the black candles. What else do we say? Okay, now you may not have started by saying going up, you could have started by saying, well, market is going down, you must sell. That's perfectly fine. That is what you're processing. That is what your brain's neural structures are indicating to you to respond instantly before you process any further. You could be saying, well, market is going down, we should be selling. Going down, selling. Say going down, selling, big candle, black candle, oh, let's sell. Going down, we're selling. Going down, we're selling, and going down, we're selling. You'll be perfectly correct, and we'll all agree with that. Now, we've looked at the chart, and all of us can say, okay, that makes sense. So if I'm in the market on this particular chart, in this particular time frame, this is what should be happening. And what happens in these blocks that are yellow? Well, those blocks then represent a change in marketing conditions, because we said in the market, when the market is doing this, of the white sections, white candle sections, market is going up, we should be buying. And if it's doing that, we should be selling. But in these zones where I've marked yellow, something happens, the market conditions change. So there's a change in market conditions. There's a change in market conditions. Now, if there's a change in market conditions, what does it mean? Well, it means we have to do something different to what we were doing before. If we don't do something different to what we were doing before these market conditions changed, then our brain is going to want to keep on doing the thing that it has been doing. And if our brain keeps on doing the thing that it's been doing into the market conditions and through the market conditions, we are going to be doing the wrong thing. And if we're doing the wrong thing, we are going to be losing money. And if you do looking at your trades in general, and you got this kind of picture in your mind, you say, but hang on a second. That is like a light switch that goes on to say, oh, I failed to shift with the market conditions. I failed to realize what was taking place with the change in market conditions. So I carried on trading the way I did before the conditions changed. Change in market conditions, carried on trading the way that I was doing before the market conditions. Market starts to do something different. So, oh, okay, when it's going down, we must sell, going down, must sell. But then there's a change in marketing conditions. There's change in marketing conditions, change in marketing conditions. we have a prolonged period of doing one thing. You know, if this is a daily, weekly, monthly chart, I mean, this is a long time for your brain to be grooved or processed to doing things in one particular way. And all of a sudden, with a change in marketing conditions, so if you can continue to do that very same thing that you were doing without taking into account the change in marketing conditions, you're going to lose money because your brain is so grooved and so focused in trading a particular way. Now, we go back just before I move forward. So, particular market conditions dictate that we trade in a certain way. Then we have a change in market conditions, and we continue trading the same way. Change in marketing conditions, we trade in a different way. But we waiting to trade to trade going up, and the conditions, the market changes, we now trade going up again. Change in marketing conditions, you can't keep trading as a long. You can trade as a long. Change in marketing conditions, you can trade as a bull, going long. Change in marketing conditions, you can't trade the same way you've been trading. Something has to change. So every time we have a change in marketing conditions, prolonged period, and the market starts doing something different, we have to change our brain has to accept that things have changed. And if things have changed, then we must look at trading things differently, trading the market differently. Same kind of thing here. If we are in a period where the market is going down, all these areas, the market is going down, and there is a change in conditions, we have to be able to, our brain, which governs the way that act, has to be able to quickly shift to a different way of looking at the markets and saying, well, we are now in a change in market conditions. I do not know what those change in market conditions will emerge as afterwards, but while I'm in it, I cannot trade the way I traded before the marketing conditions changed. So the ability to be able to understand, to see, to process that I am in changing marketing conditions is absolutely key to eliminate losses and to preserve our capital and ultimately to increase our profitability. And the way that we do that is by realizing that in different marketing conditions, we have to be able to trade differently. If we can't trade in certain marketing conditions or unclear about what's taking place after a prolonged period of success trading long, and you enter into that kind of phase, if you continue trading the way you've been trading successfully, you will lose money. And eventually, market starts to go sideways. That's a change in market conditions, and then sells off. And the way you've been trading profitably all the way through here, no longer relevant for a bit, depending on whether this is a monthly chart or a weekly chart, no longer relevant, completely irrelevant until we go sideways. Now, what happens in those yellow conditions? Well, in the yellow conditions, when the market is changing, okay? Now, a change in conditions, if I can just point that out, a change in conditions here, in this example, I've used the yellow zones, market is going sideways, as the zones where the market is changing conditions. But you could easily, and you'd be absolutely correct, to say the change in conditions from when the market is going sideways is when the market breaks out. Okay, so you could say you like trading in trading ranges, but when the market breaks out of that, that's a change in market conditions to doing something different. Okay, if you come up here, you're pretty happy to trade in that you're very good at that. The market does that for weeks, months, and you're happy with that, and it does that again. But when it gets out of that, then this becomes a change in marketing conditions. So if your brain has become skilled and very good at trading in these yellow zones. When we break out into either a bear trend or into a bull trend, that becomes a change in marketing conditions. So a change in marketing condition does not just mean a trading range. It means the market is doing something different to what you have been consistently doing, and you've been consistently doing well. Now, in here, because of the example that I used, we spoke of buying and selling. What happens in these changed conditions? Well, you enter into this environment where you're going to be looking to buy low and sell high. All along here, is different. Okay, all along here, the market is going up. You're buying, 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 buying. When you get into this, you'll say, oh, things have changed a little bit. When I'm at the top here, I can sell. When I'm at the bottom, I can buy. When I'm at the top, I can sell. At the bottom, I buy. So this is the behavior that you now need to adapt. Your brain is to adapt to different kind of behavior when you are in these yellow zones. You're buying anytime we're down here, and you're looking to sell anytime we're down there. Buying anytime we're here, looking to sell anywhere at the top. And as soon as the conditions change and we break out of that, then we're just looking to buy as we go up, looking to sell as the market is going down. So you're looking to buy low and you're looking to sell high. The reason we are doing that is because we are now instructing our brain that the conditions have changed. So here is where it gets interesting. How does it affect us as traders and the results that we produce? The more prolonged a particular set of conditions is in the market, and the more you consistently trade that particular market structure, market condition well, it evokes emotions within you, joyful, happy, excited, etc. The brain's neural structures and pathways become more enforced, and that carries on. The problem is, more often than not, that behavior that made you successful here carries on into the early stages of the change marketing conditions. And unless you address it very quickly, you will lose money in some of these areas until you say, hang on a second, what's taking place? The conditions have changed. So for months on end, it's been easy just to make money as a bull. Now, my brain has to quickly adapt to shifting and changing to trade this differently. And when this comes in, brain says, hey, we're back to what made us successful before. Let's kick in and start to keep on making money. And then the conditions change again. And unless you shift and instruct your brain that conditions have changed, you will continue to lose money doing what you're doing well here until you realize, hang on a second, conditions have changed. Let me do things differently. And when you do things differently, depending on how long this is, when you get into this zone again, you have to be prepared to open up your mind to the possibilities of change so that you can trade this successfully. And when you get up again here, what made you successfully here, what you had to deal with here is no longer relevant. Something else has to kick in place, and that changes. So that creates a fair level of complexity in the market. The reality is the market presents us this continuously and on an ongoing basis. And I just find this quite insightful. I've not shared in any of my coaching or for the guys that I'm coaching or in any of the shows before. I've not shared this kind of information before because it's something that is pretty, you could say, common sense when you grasp it. But until you grasp it, you're like in a fog and not clear about what's taking place. But the moment you see it, the light switch goes on, you become aware of the brain's processing structures and impact on trading, and then facilitates a faster recovery for affected traders. You can immediately turn around the situation. So even if you go down here, or after this, use this prolonged period of bullish price action, and you're struggling through here, the moment you realize what's happening, you'll be able to turn the situation around pretty quickly. So I thought I'll share this, and it's still quite interesting, still fresh, and I'm looking forward to discussing it further in other forum, with the different mentorship pathways that we have. Discuss it further with you. Post any questions that we have to the admin team, and we can have a look at that as you go forward. Hope you found it interesting. I have certainly enjoyed it, and I really look forward to discussing further with you. Thank you again. For those that know me, name is George. If you don't, George NYABADZA. We'll catch up again soon. Bye-bye.